A Friday sell-off is here. It seems like markets all over the place are adjusting to more of a risk-off focus. And a couple markets to point out are the dollar index is rising dramatically. At the same time, you got the pound and the euro just selling off. It looks like a bloodbath over there. You got gold running to $24.15 an ounce. Record highs being made as we speak, and oil is exploding as well. At the same time, you've got stocks selling off here today. That is clearly evidence of a risk-off day in the markets. Let's talk about it. WTI crude futures rose to $86 per barrel on Friday, recouping most of the losses from the previous session as the prospect of a wider conflict in the Middle East continued to stoke fears of further supply disruptions. Israel's reportedly preparing for a direct attack from Iran in the next 24 to 48 hours, as Tehran previously vowed to retaliate against a suspected Israeli attack on its embassy in Syria. Now, here's the thing. Anytime you get geopolitical conflicts escalating, it generally stokes some market reaction. And what we can see here is nothing short of a reaction. Here's the VIX up 17% on the day. That is a massive jump in the VIX. You've got the NASDAQ down 1%, the S&P down 0.8%, gold screaming higher to 21.15. Don't talk to me too much about gold right now. I just got trailed out for a profit, but then it proceeded to jump another couple percent. That kind of hurts, but I can't complain. I've been in this trade for some time. That being said, we also have oil jumping here massively, and you've got yields dropping aggressively. This is all evidence of a risk-off move in the markets. When you see the dollar up, you see bonds up, you see commodities up, and you see stocks selling, that's usually something is spooking the markets a little bit. So let's take a look first at the stock market here today. You can see continued resistance here coming into this market. Despite the back and forth nature, CPI and PPI caused a lot of volatility here on this one. And what we can see is that this upward trend line that was once just undefeated, it seemed like, has finally cracked. We start to see, what was just this impenetrable upward trend now crack, and we're now going sideways. Are we bearish yet? I don't know that I would say we are. However, there's some signals that we should be a little bit careful. With gold running up so much, also the CPI number coming in hotter than expected, pushing back expectations for rate cuts, it all falls on earnings season for the stock market. If you're watching the S&P, the NASDAQ, or the Dow, earnings season kicked off today with banks, and not the least of which is JP Morgan down 5% on the day. This is not starting out well. And again, if you're looking at a higher than expected inflation situation, which again, we've talked about right here over and over, you can see US inflation actually even ticking back up. If this persists, where you have hotter than expected inflation, the Fed is not going to cut rates. And if you couple that with a slowing earnings season, that would be a nightmare for stocks. We would probably see a 10% correction if that is really the case. If we see slowing earnings and hot inflation, not great. Now, the saving grace could be that, in the next few weeks, we get strong jobs or strong earnings numbers out of US companies. If that happens, guys, what we probably do see is, despite hot inflation, the stock market could break out. Now, that might sound crazy because, again, the Fed's not going to cut, but I would argue that the Fed doesn't need to cut for the stock market to keep going up. A lot of people would say something different. They would say if the stock market does not see rate cuts, it's going to sell off massively. But I would argue that as long as the Fed stays generally accommodative towards the market, meaning they're going to cut rates at some point, and we also see earnings coming in strong, the stock market can keep going. Now, that being said, I'm not really convinced either way right now, and I'm very neutral on these charts by taking a look at the S&P, the NASDAQ, right? These charts are pretty range bound. I'd like to see decisive movements one way or the other before really picking a direction. So for me right now, if I'm taking a look at the top setups algorithm, you can see that the NASDAQ is getting a bullish reading, but we do get fresh COT data later today. Stick around for that. If you have the Edge Finder, again, we will be getting the latest round of data this afternoon, 4 to 5 o'clock. We usually get the commitment of traders data. We got the last one April 5th. We'll be getting our next round here today. So what we'll be able to see is the latest information about what institutional money is buying or selling within the financial market. Are they buying indices? Are they selling them? Are they buying gold? Are they selling them? Also, you might recognize some new faces on the Edge Finder. If you're a fan of the Edge Finder, guess what? we just added some brand new assets, and I'm so excited about this because it's been a minute. We added platinum, we added silver, we added the Russell, we added copper as well, which is right here. So we've added 4 new assets, and we're currently completing that process. It is a hard, task to bring in all of the necessary data for a new feature or a new asset, but adding 4 new ones today is really exciting. Not to mention, we are also currently doing our biggest sale of the entire year. The Edge Finder has been out for 2 years officially, and in these 2 years, we have made so many advancements to this product. We've come so far, and to celebrate our 2 years since we've launched this product, we're doing 45% off for anybody who clicks the very first link in the description down below and chats with someone on our team. Again, do not miss out. This is the best discount price of the entire year. So if you've been thinking about it, take advantage before we raise prices again. So there you go. For those of you guys who are watching gold, I'm kind of in the neutral territory, which is tough to say. I am trailed out officially of my trade. I'll show you guys what happened here. So price came down, and look at this. I was really like, gold, are you really going to do this to me? But gold is a fickle beast. With that said, price came down, tagged me out, trailed me out of my trade, which if you've been watching the channel, you know I've been long since February and March. I added a second trade in March around this area. I went long gold, ended up being a very nice trade, ended up being like a $19,000 or $18,000 something winner on the account between XAU USD or GLD, which is what I traded, gold spot. I also had bullish positions on the gold miners, GDX, which also exploded. So we made some good money on this move, and I wish I had more moves like this to speak of. They are rare. That being said, I do have one other one. Oil is flying high, and I am currently still in a long position here. I've been long on oil since late March, went long because the signal on the Edge Finder showed up, and I liked the technical setup. I managed my risk. Commitment of traders data continues to look good for oil, so I stay long oil at this time. Here's my current P&L. We'll go USO. I'll show you the trade. I'm up $14,783.08 on this trade so far. Continuing to trail stops. Stops are in place. If this market continues to rip, then great. If it does not, then I will be out. Look at silver, guys. Silver and gold both going crazy, but really healthy for the metals market. And I'm cheering on the people who are going, are metals bulls right now. Although I am no longer in the trade, I wish you a safe flight because things are flying for the metals, and I love to see it. Silver, I have some silver positions that are much longer term, so I'm very happy to see silver finally making a big move, getting close to that $30 an ounce mark, which was the high, by the way, of 2021. So I'm very excited to see that 30 is back in play and not too far away. So we'll see how that one goes. Also, yields falling today again on geopolitical concerns potentially. Also, if earnings come in light, you might see some slowdown in the economy. Remember that the stock market, many would argue that the stock market actually is a forward-looking indicator of the U.S. economy. And so if the earnings start to roll in a little slow, you might see yields drop on that as well. I do have a TLT position, and I'll show you that P&L right now. So here's a look at all of my positions currently when looking in my WeBull portfolio. So just so you guys know, the broker that I use is WeBull, although it's only available for certain countries. That being said, I've got some special sign-up perks down below in the description. If you're looking for a new brokerage, all of them have special sign-up perks for my audience. So make sure to check them out if you're looking to trade CFDs like XAU USD, NASDAQ, whatever you want to trade. Again, consider using my links. This will support my channel if you choose to use them. You don't have to, but I'd appreciate it. Anyways, TLT, this is a position that I am currently in right now. I've sold puts. This one's gone against me, so I'm dealing with this drawdown currently. What this is telling you is that on expiration day, which is 4/26 or April 26 here, if the price continues to stay below here, what happens is I have to buy the shares. I have to buy 1,000 shares at $93 per share, and that would put me in an immediate drawdown of the difference there. Now, the nice part is that I also collected a premium of $1.07. So in actuality, what I actually get assigned is $93 minus $1.07. That puts me at $91.93. So that's where I would actually get filled on my shares. So if I continue to see that, I wouldn't mind owning a little TLT in the position. I think that if we are going to get rate cuts at some point this year, this will end up looking like a decent spot to hold it longer term. This is part of my wheel trading strategy. I have two different trading strategies that I use. One is a momentum trading strategy like the ones you see on gold and oil, and the other is more of a mean reversion option selling strategy that I've used for some time now. It's been awesome to incorporate both two strategies into the same portfolio. It really helps to smoothen out the equity curve of my trading performance over time. Let's have a look at the euro, which is selling off dramatically here. Look at this, breaking through the lows. Really, really strong stuff here as the dollar just looks attractive relative to its peers right now. What we have is, when looking at the Edge Finder's breakdown on this, you can see that if we just go category and we go major currency pairs, USD JPY, USD CAD, USD Swiss, pound dollar, euro dollar, Kiwi dollar, they all look super strong relative to, the dollar looks really strong relative to its peers. And these signals are coming from basically economic data primarily. You can see a big bulk component of our scoring comes from economic data. So GDP, PMI data, retail sales, inflation, jobs data, interest rates, etc., are generally favoring right now the US dollar. So as long as that remains the case, I'll be looking for pullback opportunities on things like Euro USD, Pound USD, etc. In fact, did the pound dollar break our level? It did. Look at this. So what was support, we now need to go ahead and mark as resistance or supply on the daily chart. So if you get a pullback on the pound or the euro, these are setting up some really clean looking charts, and actually I kind of like them. So if we get a pullback here next week, I'm looking more for continuations on the dollar, and this is looking really strong. Same thing with the dollar yen. If you get a pullback into support, this may be an interesting one to play on the long side as well. It's an area of the market that I kind of like. You're seeing just a slight favor of the yen today with all the risk off sentiment, but pretty much looking at all the dollar crosses, that all the majors, looking for opportunities to favor the USD in this situation. If you're watching things like Australian dollar or Kiwi dollar, watch for some breakouts. Let's see if we can get some break and retests on these charts. With that said, guys, thank you very much for watching today's video. If this was helpful to you in any way, shape, or form, do me a quick favor, hit the thumbs up button on the video on the way out, and we'll see you back tomorrow. See you guys. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.